This afternoon's panel I have Pat Farrell. I don't see Pat, but I'm assuming he's there. He's the CEO of IIP, which is the Irish Institutional Property. It represents Irish institutional property. It's the representative body for institutional investors. Pat's had a long career in the whole area of banking and has had previous roles in Bank of Ireland and the Banking and Payments Federation. We have also Professor Michelle Norris. She's the director of the Geary Institute in UCD. She's also a member of the board of the Housing Finance Agency and the Land Development Agency. I have also Hugh Brennan, who is the founder and CEO of Cualann Cohousing Alliance. It's an initiative to deliver affordable and fully integrated housing, and he's been a champion of affordable housing solutions. And also I'm joined by Dr. Joe Frey. He's the knowledge exchange broker for the UK Collaborative Centre for Housing Evidence, CASH. Joe's role is to provide a bridge between policy and practice in Northern Ireland and the leading academics in the area of housing. Joe's previously served in many roles in the Northern Irish Housing Executive. So starting with that, I just want to briefly recap on what we concluded this morning. We had a number of presentations which I suppose illustrated in stark terms the level of insecurity and the lack of affordability in the private rented sector in Ireland. We also had a very interesting discussion with Christine Whitehead looking at the role of, for example, institutional investment and also the type of solutions that have been put into the system in other European countries around rent certainty, rent regulation, and so forth. We concluded, I think, the morning session with a number of questions that I'm hoping that we'll get to this afternoon. Certainly from the Tenant Sentiment Survey, Threshold's Tenant Sentiment Survey, there was certainly a sense that for more than 60% of tenants that were surveyed, they wanted to own their own homes and weren't living in the private rented sector by choice, but rather because of a lack of choice. 14% wanted to have a social housing solution. So we really came to the conclusion that in and around 24% of people living in the private rent sector in Ireland at the moment want to be there because that's their tenure of choice. So I thought I would start. I don't know, have we been joined by Pat yet? I don't see him in my profile. You are there, Pat, are you? If you could put on your camera, that would be great. So I wanted to start with a very broad question for the panel, okay? One of the things we looked at this morning was up in home ownership rates generally, not just in Ireland, but across a wide range of jurisdictions. Again, not just Anglo-Saxon jurisdictions, but right across the entire, I suppose, Western world in one size or shape or another, and a very significant rise in private renting. And, you know, we had a very broad discussion, as I've said, on the issues around renting, particularly around the sense of place, of home, affordability, and the deep insecurities that there are there in the private rented sector. Pat will be aware that we also had a discussion on institutional investors, a growing role in the private rented market, not just here, but internationally. You know, Ireland is not alone in this. And I just want to acknowledge the research that was done recently with IIP and Cluid, and a number of the recommendations from that research echo the recommendations that Threshold made today and have done in previous pre-budget submissions, but particularly there were recommendations around affordability and around the need to look at how supply can be increased in the private rented sector and in general, supply generally in the housing market. So I suppose the old adage is supply, 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 the market dominates and so forth. So I'm going to throw out the first question and feel free to be the first one to answer it. Should we accept a structurally lower rate of home ownership? I'm a renter out there now at the moment and I'm putting this question to you. Should we accept that there's a structurally, you know, going forward, a structurally lower rate of home ownership and focus our policies on developing a long-term affordable rental system and refocus rather than refocusing our efforts on boosting home ownership? So I'm just wondering what the panel think about that. So who would like
Well, I'll come in first,
Great,
Aideen,
thank you.
thank you very much for the opportunity. I honestly believe that if people felt more secure in their tenancies, that they would opt for rental and long-term rental. And if, for argument's sake, if affordability is linked to income, and if that's the case in perpetuity, so that when you retire and your income reduces, if your rent is still linked to your income, then people would have no difficulty in renting on past retirement, safe in the knowledge that their rent is never going to go above a certain percentage of their net income. So in that kind of a scenario, I would absolutely agree with you and say that we should get this structural shift. Until that happens, I honestly don't believe that you're going to get it, and I don't think it should be imposed on people.
Okay, well, so look, I'll ask somebody else to jump in. Michelle, what would your view be on that as an option going forward?
Well, I think the rent linked to income model, which we operate in social housing here and have done since the 1960s, obviously has benefits for individual affordability, but in terms of the management and maintenance and overall running of the sector, it's been very, very problematic. So it's really an example of kind of the challenges we face in terms of trying to balance the need for affordability with the need to fund and run a housing sector. I suppose in answer to your initial question, Aideen, I think, yes, home ownership has been falling in Ireland since the 1990s in many other English-speaking countries. And we see that trend in other countries as well. I think one issue in Ireland that hasn't been discussed in relation to the decline of home ownership is the increase in migration into the country. And in every country in the world, people who are migrants are less likely to be homeowners. And that may reflect in part discrimination or people having trouble generating credit records to get mortgages. But it may also reflect preference that people don't wish to buy a house in a country they don't wish to remain in long term. So I just wanted to put that out there as kind of a complication in the Irish situation. We were a very, very, very mono-ethnic country in the 1980s, and we're not now. So that's one section of the population. I mean, that said, for many people, buying a house is an aspiration that they feel they've been deprived of, and it is a very legitimate and reasonable aspiration for households. There are lots of individual benefits in terms of security, but also benefits in terms of financial benefits for ordinary households. It's the only real method of wealth accumulation open to lots of people. So, I mean, it's popular for a very rational reason. And I think in terms of government response to all these many pressures, I think the response has to be multifaceted. So for two-income households, and particularly households outside the Dublin area, where they, well, certainly until after the COVID boom, the market was less inflated. It may be a very viable option to buy a home using, particularly with supports of initiatives like Hugh's, with things like the Rebuilding Ireland Home Loan, etc. That may be very viable with some state support. And by the way, state support historically in Ireland for home ownership was high. So many people's parents and grandparents benefited from subsidies, which now are not available to younger people. So in my view, there is an argument for some state subsidies in where people need support, just making it over the hump, and home ownership long term is viable for them. Saying that, there are other cohorts of people that just won't be able to support a mortgage long term, and particularly for people in single income households and people in the Dublin area, accessing home ownership is going to be extremely challenging, particularly with the population growth. So in my view, things like cost rental have a lot of potential to address the needs of that population and can provide a very viable and attractive option long-term for people. Hugh mentioned the issue about people paying rent or mortgage in old age, which is a big concern for people, particularly people paying rent, and some system to deal with that would have to be addressed in cost rental housing. But the concept is over the long term, the rents remain reasonably stable or rise certainly at less than wages. So it would provide another option. So I think in the Irish context, in cities, in higher for smaller households, lower income households, cost rental could provide an attractive alternative. In other areas, in many cases, it makes sense for the state to provide a small additional support to enable people to buy a home, rather than very large support, for instance, that's required to provide social housing.
Great, Michelle, thank you very much. I'm going to be coming back to some of those issues, particularly around, what can cost rental offer? And indeed, what about schemes such as shared equity schemes? I'm particularly struck, that on one level, we're seeing increasingly from surveys that have been done, not just by ourselves, but as part of the IIP Cluid research as well, that, in both of those pieces of research, the overwhelming response from people was that they actually wanted to own their own home. So I think this is a particular nexus here, in terms of people's aspirations. And, while we're exploring here, would a more affordable, better rental sector get over that divide? There's still an issue for people. My parents owned their home. My grandparents owned their home. I haven't a hope of owning my home. Where does that leave me? And there are questions in terms of generational, I suppose, solidarity, where you look at, again, just harping back to the tenant sentiment survey, the only group that answered our survey who actually wanted to be renting where the majority wanted to be renting were under 24 years of age. So maybe I just come back to some of those issues, but could I just move on to Joe? Joe, just looking at Northern Ireland, for example, are you facing the same question? Dropping rates of home ownership, rising rates of rental, and questions being asked about where society is going in that context?
Yes, Aideen, Christine Whitehead gave a key statistic this morning in terms of the private rented sector trebling. She was referring to England, Scotland, Wales, but it was exactly the same in Northern Ireland. The proportion of households now living in the private rented sector in Northern Ireland is approximately 20%. And they're very good. The sort of general international factors behind that have operated in Northern Ireland too, in relation to the economic ones, the demographic ones, and the greater availability of finance, deregulation of the financial markets and so on. In Northern Ireland too, there's specific actions in terms of less money, less finance for social housing, so a very high and rising waiting list for social housing, combined with the affordability problems that first-time buyers have faced, less so in Northern Ireland than in the south. House prices really have come nowhere near what they were in 2007, 2008 on average here, typically still around 30% lower than they were in those days. So it isn't so much an income house price issue in the north. It's more about access to funding and labour market issues and the practices of the banks and building societies. In terms of the rental, we've seen figures emerging more recently from Property Pal on an ongoing basis, which provides a fairly regular index in terms of what's happening in the property market. And ironically, they have actually risen against expectations, where we thought with COVID and so on that the property market might drop away and so on. But in actual fact, both house prices and rents have risen fairly steadily. They're still hugely different from, say, Dublin. The average in Northern Ireland is around £670 a month, but that's obviously much lower than the equivalent in the south, certainly in and around Dublin and Cork and so on. But I think Michelle was quite correct to point out that the problems are not only about affordability in the private rented sector. There are other wider issues, particularly in terms of security, particularly in terms of the conditions, and in terms of, you know, the aspirations. And there is, and you touched on that too, there is still this aspiration. Research in the North shows this too. You know, most people, if they think they can realistically afford it in the foreseeable future, do aspire to home ownership. A lot, I think, of the younger generation realise that they may well spend a lot longer in the private rented sector for a range of reasons, and particularly the time taken to gather a deposit if they haven't a bank of mum and dad they can tap into. But still, the longer term aspiration is to move into home ownership. And I think there's a cultural tradition there, which I think would take a long time to overcome, unlike, for example, in Germany, again, which Christine mentioned and went into some details on. So, you know, to answer your question, yes, I mean, I think the private rented sector is here to stay. I don't think it's going to increase with the same rapidity that it did between, you know, 2005, say, and 2012 maybe, when there was that very big increase initially because of investor interest, and then because of the difficulties of first-time buyers trying to get into owner occupancy. But I think it will tend to stabilize. I don't think, unless there's a radical change in terms of underlying economic factors or government policy, which does still seem to be driven essentially by neoliberalist type approaches, I don't think we're going to get away from a return to 70–80% over occupancy.
Thanks a million, Joe. Could I move on now to Pat and just kind of put the same question to you, Pat? I suppose, you know, should we just accept home ownership is kind of, you know, a dying breed, so to speak, and focus our efforts on alternative answers to kind of boosting affordable rental? Or would you have a different view than that? Pat? Sorry, I'm not hearing Pat. Okay, look, so I'm going to just move on then.
Can you hear me?
Ah, yes, I can hear you now, Pat. That's great.
Yes, I said, I suppose, an answer to your question, it depends. I mean, there are lots of factors that play into different countries.
Your volume isn't brilliant, Pat. Could you move closer to the microphone?
Yes, can you hear me now?
Yes, I can. Yeah, thank you.
Yeah, it depends, I suppose, in the sense that you know, there are lots of factors can play in different countries. I mean, we have the historical backdrop here in Ireland where, you know, historically people were deprived of ownership, and that tends to weigh on the thinking. The issue that Michelle mentioned around mono-ethnicity and then moving to a multicultural society, there's quite a lot of migrant population there that would be, say, in the tech or you know, people that are here with visas because they have high-end skills, and they would choose to want to rent at least for the first few years because they may not be here for the long term, and they definitely don't want to make a big investment in a house at the outset. So for them, rental is a very real option. I think it has to be acknowledged, it's very fair to say that probably a fair cohort of, and it comes out of all the surveys of people that are in the rental sector there because they have an affordability issue and they cannot organise sufficient finance to actually be able to acquire a home of their own. And that brings us back to the perennial issue that's pervasive across the whole Irish housing system, which is that we have a chronic lack of supply across all tenures. And the only way that we can address all of these problems is to actually increase supply and scale it up quite rapidly. And that means that the private market has a role to play, but it's by no means capable of satisfying all of the demand that's there. And that also means that the state, and thankfully the LDA legislation is through or almost through the legislative process at the moment, but the state itself has to significantly ramp up supply as well on that end to meet the needs of people for social housing, and indeed for a large segment that we would classify it in the affordable bracket, but i.e. to have the aspiration and to probably have the financial wherewithal to purchase a house, but the moment they just find that because of the affordability gap, home ownership is beyond their reach, and they are effectively in the rental market, not by choice, but because of circumstance. So it comes back to as I said, the fundamental issue is a chronic lack of supply and the need to drive up supply across all tenures in order to be able to, I think only then will we find what is the natural split between rental and between home ownership, because it's skewed at the moment, I think, by all those factors. The only other thing I just say, and I think it was Hugh mentioned it earlier as well, is that tenure doesn't get enough, or security of tenure doesn't get enough focus in this debate. There's naturally a lot of the focus around the actual cost of rental, but we really do need, and there has been a lot of talk about it, but policymakers haven't moved decisively on it yet, is to improve the security of tenure for people. Because I do agree with you that if people had better security of tenure, that I think the way they would view rental as a long-term option would be quite different.
Now I'm just going to set you up for a couple of questions I'm going to be putting to you, okay? One relates to exactly what you're talking about, Pat, which is, you know, the cost of providing housing. Why is it so high? And I know that you will have a couple of thoughts on how it can be reduced. I suppose another kind of aspect of this is in terms of social housing and, you know, its capacity to balance out the market and be a more kind of, you know, steadying influence on the market. But I suppose also, you know, the elephant in the room about home ownership is, as Michelle has already mentioned, it's really about, you know, inequalities in terms of wealth. You know, it's true in terms of any of the studies that have ever been done. The people who don't own their own home, they don't have an asset portfolio of shares to balance out that wealth. And again, an elephant in the room is already been mentioned. What happens when people retire? You know, irrespective. The Irish model has been based on you own your own home, you don't have housing costs after a certain age, and in actual fact, a lot of people downsize, which helps to support their income as they get older. And in fact, Michelle, your colleague Tony Fahey has done a lot of research on that. The whole issue of Irish older people not having the level of poverty they might otherwise have if they didn't own their own homes. So I'm parking those for the moment. And I'm just going back to some of the changes that we've seen in the rental market in Ireland. And I'm going to stick with you, Pat, if you don't mind for the moment. Institutional investors, they have, you know, the big change in the last 5 years has been the involvement of institutional investors in the Irish market. And not just here, of course, as Christine pointed out earlier. And they're going to have an important part to play for a number of reasons. Your own report with Clued mentioned the need to have greater, you know, numbers of apartments developments. And that, as we know from the various cost surveys that have been done to the Chartered Institute of Surveyors and so forth, leads to higher unit prices, for example, which are more, they're more manageable for funds in terms of buying those units. And therefore, there's going to be an inclination going forward in the market to move those units into longer term rental. So I suppose, you know, I just wanted to get your picture, if you could fill us in on where you see that level of institutional investment going in Ireland. How big is it going to be in the market, do you think? And also, can institutional investors play any part in bringing affordability into the market? Or is it more like Christine suggested, you know, their role is at the upper end of the market and that ultimately there isn't really a role for them in terms of people on lower incomes?
Yeah, well, I suppose in terms of, to start with the last part of your question, I mean, I think there is a role for institutional investors across the market. In recent times and given, well, sorry, first of all, the role of institutional investors in the Irish market is relatively recent. If we say relatively recent, starts at around 2012, 2013 onwards, maybe even a little bit later than that. It's only about 3.5–4% of the entire stock of rental accommodation in the country. So it's really quite small, but it is growing. And I think there is a role because I just call out one headline number. I mean, it was pretty widely reported in media in the last few weeks that Legan in general had committed 50 million to Clued for the provision of social housing. So I think there's a lot more funding like that available because if you look at the kind of institutional investors that are operating in the Irish market, they are by and large investing money on behalf of pension funds. One of the biggest investors in PRS institutionally in the Irish market are Canadian teachers' pension funds, and one of the, I think the largest one is a fund that is investing on behalf of Dutch teachers' pension fund. So they're looking for returns in the range 3 to 5% over a 10, 20, 25-year horizon. And they are prepared to invest in all of the tenures. It has been up to now more in the build to rent and PRS area. But as I said, the legal and general investment was interesting. And I know that in other countries, the level of institutional investment in social or that is much bigger. And I think if the conditions are right here, that there's a lot more funding available for that kind of investment. And it's needed, because if we say that we need some, if we even say we take a low ball figure, which is 33,000, I think it's more than that. New homes we need every year. It's going to take at least 78% of that money has to be sourced from institutional investors, because as a small open economy with not a lot of embedded wealth, we lack the domestic capacity to fund all of our housing resources from either direct government borrowing, which is at or near its limits post-COVID, or indeed from domestic sources. So we're going to have to continue to source institutional investment from international sources. And as I said, because thankfully of lower for longer interest rates, there is a lot of that kind of funding around that's looking for what I would characterize as a fairly modest yield of, as I said, the kind of one that a pension fund is looking for 3 to 5% over the longer term. So yes, I do believe that level of funding is available.
Yeah, but I mean, just going back to me, like the middle income renter,
yes,
who's looking for a sort of my safe, secure home, the kind of, prices we've seen being put on institutional properties are, fairly hefty. Do you see, institutional investors ever moving down to provide homes for maybe more people on more modest incomes, or stuck by the costs of provision, which are going to limit it to the higher end of the market?
By reference to one of the largest provider, as I understand it in the state, IRAs, they have a substantial proportion of their renters would be in receipt of HAP. So by definition, they are in that market. So I think there is that proposition can be supported, and I think that opportunity is there. I think what institutional investors would require more than anything else in order to continue to broaden out their offers and to address the market, the particular area you're talking about, is policy stability and certainty. There's quite a lot of change and chopping in policy at the moment. Some of that we'll say maybe has been necessary because we've had a crisis and there's obviously a need for some policy initiatives, but there seems to be a continuous drip feed of policy initiative. And I think that makes the environment riskier for investors, because the kind of commitments they're making have 10, 20-year horizons. So they need to have a reasonable view of what the policy landscape is going to look like over that period, and not to expect too many surprises. Like, for example, I mean, just overnight, we've had the announcement of the linking of rents to the HICPI, which if you think about that, I mean, we are embarking on a big climate change challenge. We're going to need to invest significant amounts of money in retrofitting and bringing up to an appropriate standard all the legacy properties within those 330,000 rental properties that are out there. The question will be, how do you fund that investment if your actually ability to set your rental rate of return is based on HICPI, which at the moment is something like, I think, is at 0.73%. Yeah. Likewise, the need to invest in maintenance and so on and so forth. So these are all considerations.
Yeah, thank you very much, Pat. Could I bring Michelle in on that?
Thanks, Aideen. I suppose in a declaration of interest, I am the chair of the Housing Finance Agency board. So the Housing Finance Agency is one of the main state funders of social housing in the country. So we approved approximately $1 billion in state loans for social housing provision, primarily to approved housing bodies last year. The drawdown was somewhat less, about half of the loans were drawn down during COVID, but we would envisage that will rise. So I just want to acknowledge that a declaration of interest before I go on to just respond to Pat's comments. And on the issue of institutional investors' involvement in housing, I suppose, like many things housing related, the devil is in the detail. So generally across Western Europe, the market in the form of banks, bonds, investment from institutional investors, loans from institutional investors, does play a much bigger part in the financing of social housing. And in most countries, that's associated with a much larger and more stable social housing sector than we do, and than we have in Ireland. And certainly the big social housing sectors in France, in Denmark, in Austria draw on a lot of private finance. So I think diversity in terms of finance is very, has lots of benefits, because the state can't always provide the finance we need, particularly when there are other demands on the public purse, and when the state's capacity to provide finance for social housing increases and decreases depending on the health of the exchequer. So in general, I think as a principle, generally diverse sources of finance are valuable. But we need to be clear that what is being provided in countries like Austria through private finance is not what's being provided here. So what's being provided is long-term, very low rate, strongly regulated loans through the banking sector, which aren't returning anything like 5%. And in the Irish system, so I think a model like that would certainly be very welcome, or a model where the placement of loans, provision of loans from investors was properly regulated by the state and placed with housing associations or whoever was providing long-term social housing. But what's being proposed in Ireland and what we have is not that. It's individual funds doing deals with individual housing associations for, in many cases, interest rates which are much higher than the state could borrow for. And all housing associations in Ireland are legally public bodies under Eurostat rules. So all their debt is part of the national debt in any case, no matter where they borrow from. So in my view, private finance is attractive if properly regulated and at appropriate interest rates. The other issue we have in Ireland is private investors being involved in the provision of social housing support, as the Department of Housing call it. So in the provision of dwellings that are then leased back to the state for use of social housing, etc. And I think that is proving extremely problematic because the state is effectively bidding against itself in terms of the long-term permanent social housing finance agencies, funding, and housing associations and local authorities are providing, is having to compete in the market against funds who are bidding to buy units and then get subsidies from the state in the form of lease agreements to let them out. So just in terms of the management of the sector, to my mind, that doesn't make any sense, that part of what's going on in this country. And I noticed on the chat, somebody called Martina made a very good point just around treating social housing as an investment. And in my view, social housing is a really important investment for the social good and also for the economies, and it provides vital housing for workers. It can help stabilise the construction sector. But one of the issues in this country is we've never treated it as a proper investment, and the proof is we have sold it off at knockdown rates over many decades, which is the primary reason we don't have enough social housing. So I'm just going to add that on as an additional point. But on the investors, I suppose the point I'd like to make is the devil is in the detail. And some of the comparisons people make here with what goes on in continental European countries with housing systems that look much more attractive than ours for a lot of reasons. actually are much more complicated when you go in to look at the details of what's going on in those countries.
Okay, I'm just going to put 3 quick points and you next. 3 quick points. I mean, Pat, you mentioned about a Canadian pension fund, you know, investing heavily in the Irish rental market. Well, that sort of suggests that Irish tenants' rents are going to pay Canadian pensioners as opposed to going to pay Irish pensioners, perhaps. And I suppose the other issue is in relation to Irish REITs, you know, and providing HAP accommodation. It question then to, you know, what form of support in the market for low income, you know, low income who require past. So look, I'm going to quickly come to Hugh.
Sorry, can I just,
mean,
Aideen, can I
Sure.
just come back in on that one? I mean, the quid pro quo operates, and it does in reality, in that while Canadian or Dutch teacher pension funds are invested through these funds in the Irish PRS sector, Irish pensioners, their portfolios are invested in the PRS markets of other countries. There's complete global mobility of funds, so it's a quid pro quo. So pension funds in Ireland, if they're not invested directly here, they're invested in other markets, and that's the way it works.
I did notice that ISAF were involved in apologies on my dog. ISAF were involved in investing in Urbeo, which I think came in for a certain amount of criticism in terms of Irish government monies going into competing in effect with first-time buyers in, you know, the institutional sector. But I'm just going to move away from that for the moment, Pat. I'll give everybody a chance to come back in at the end. I wanted to move on to Hugh. Hugh, you've very much championed the idea of affordable ownership in your model. And, you know, looking at what's been said around the costs of provision, you know, it's scary stuff in terms of what it costs to provide a unit of housing in the Irish market at the moment. But your model is basically based, I suppose, around kind of, we should all take a cooperative view as a society around the provision of housing, and that we have assets to bring to bear as a country in terms of the land we have, you know, foregoing tax and so on. So I suppose I'm going to ask you, you know, I'm looking at all the statistics coming from, say, the Institute of Chartered Surveyors, and they're saying it costs X to build a home. And I'm looking at, you know, what you're saying, and you're saying it costs Y. Now, if I'm a renter, you know, I'm obviously looking at you and I'm going, gosh, if only I could be involved in that scheme. So where does the truth lie, Hugh? I mean, can we really deliver housing for 250,000 euros where somebody on a joint income of maybe 60,000 would be able to get it or afford to buy it? Or, you know, is that really workable? So, you know, I'll open that to you, and then anybody else who wants to jump in on that can jump in.
Well, we're doing it, Aideen. So in that sense, it is workable. And how are we doing it? We're doing it because we get support from, and particularly with Dublin City Council, we get support from Dublin City Council in the provision of the land. So on the schemes we're working on at the moment, we get the land at €1,000 per plot, and they waive the development levies, and then we have a margin, a set margin of 5% plus our overheads. And when you do that, you can do it. We pay the exact same rates to our builders as any other private developer would pay. We pay the very same, I think, to our design team. But when you have a continuity of work, and luckily now we do have a continuity of work, and we have, you know, 300 or 400 now to do over the next few years. When you have that, that's attractive both to contractors, and it is also attractive to design teams, and they will bring down their costs if they know that they have this continuity of work. So it is possible. Not only is it possible, though, in this context, it is actually possible for private developers to do it if they are prepared, I think, to reduce their expectations of what they want from every job. I think, unfortunately, in Ireland, and it's because of the bust boom nature of construction in Ireland, I think developers always seem to think that they must make a killing on every job. You know, they have to max that out. Where if they were prepared to take the long view I honestly believe that we could bring down costs across the board. And the proof of this is actually in Malmö in Sweden, where there is an organization called Boklok, and you can check them out. It's BOKLOK. They're an amalgamation of Skanska, one of the biggest builders in the world, and IKEA. And their target market is they must be able to provide a dwelling suitable for a single teacher with a child at an affordable rate for that person. And she must be able to rent that in perpetuity affordably. And they're doing this. And not only are they doing it, they are actually the most profitable section within their company. So it is possible to do it. Now, land rates aren't as high in Malmö as they are, say, for example, in Stockholm. And so there are some advantages there. But still, I think what it shows is it can be done. And we're actually talking with a fairly big private developer at the moment about this, and about saying that if you have a continuity of work, if that market is almost never ending for affordable housing, and in a growing population like ours, it is practically never ending, that there is an opportunity there for private developers to get involved. And I would argue as well that, Michelle said, that we've always made some kind of subsidy to people to get their own homes. And obviously, us getting land and having development levies waived is a subsidy. But we could be making a subsidy available to private developers delivering apartments, providing that they're prepared, that there is this quid pro quo, that they're prepared to rent out the apartments at an affordable rate based on the cost of building and the return that they need to make over time. And at the moment we're being told that it is not viable to build apartments for sale in Dublin, and I accept that it's not. But we're looking at a scheme for cost rental in Ballymun, and if we can get a subsidy of somewhere around 40 to 50,000 per unit, they can be delivered affordably. And I'm sure that the private development sector would say the same thing, that if they got this early subsidy. And when you think about that, when you spread that subsidy out over 20 years, it's absolutely minuscule. And it is something that is very affordable for the state to do in terms of their investment in housing. And when we talk about the requirement, I know there are people are saying 35, 40,000, etc. I say if we get to 30,000, we'll be doing well. And if we can get to 30,000, we've done figures showing that you can do that for 35 billion. And the reason you can do it for 35 billion is because you're recycling your money. So we would look at, say, 10,000 social homes, 10,000 affordable purchase, and 5,000 cost rental. And every penny from the affordable purchase comes back to the state. And so you are recycling your money. And I'm happy to make these available, and people can pick holes in it. So it's not that expensive. So we'd be talking of around an investment of around 4.3 billion per year, which is a lot of money, I accept it, but it's not undoable in terms of our exchequer. I'll leave it there. I think you're on mute, Aideen.
Sorry, somebody put me on mute. It wasn't me. It must be the organisers. Sorry about that. Listen, could I just ask you, obviously what you're looking at there is sort of some kind of closed system. So in other words, once a property is designated as being for affordable purchase, if you know what I mean, it remains in the system, and any money that comes, out of that has to remain in the affordable system. Am I right about that, Hugh? Does that make sense?
That's the ideal, but in practice, that's not what's happening. So just let me explain. What is happening in our schemes at the moment is that there is a clawback. So if somebody needs to sell or wishes to sell, in the first 20 years, they pay a clawback, which actually goes back to the local authority. It comes to us, but goes to the local authority. And that's to cover the local authority for the land and for waiving the development levies. But at that stage, that house is now back on the market because the person who has sold it is getting the market rate for it, but they are paying a clawback back to the state. Our preference is that they would actually have to sell it back to us, and then we could sell it on again affordably. But this is the rub. The banks regard that as a restriction on the sale of the house, and they're not inclined then to issue the mortgage in the first place. I mean, we had to go through hoops just to get them to accept the clawback. But they have accepted that now. And I think eventually they may accept the other one where, you know, where they would sell it back. But for the time being, they regard it as a restriction on the sale of the house and won't issue the mortgage. Funding for community-led housing, if you want to call it that, or cooperative housing in Ireland is very, very difficult. I mean, there's lots of options in the UK and in Europe, but in Ireland, it's very, very difficult.
Okay, I'm going to stick with that point for a minute and maybe pull in, you know, some of the others. Obviously, your model relies on, you know, state land being made available at a you know, a discounted rate, very discounted rate, and I know that the point has been made by Pat on a number of other occasions that, you know, the state take out of every unit that's constructed generally is quite substantial. So on the one hand, you're putting in place things like the shared equity scheme, where the state is, you know, taking sort of a 20% share, but on the other hand, they're taking a 20% cut almost out of every unit that's built one way or the other through the tax system. So how do we, you know, get over the line in terms of, can you scale up your model for the sake of argument, Hugh? Can that be scaled up? Because I'm conscious of the fact, for example, that a lot of local authorities have land debts. You know, yeah. They can't just give over land. You know, it's mortgaged at the moment, yeah. You know, and has a lot of costs attached to it. Yeah. So, you know,
yes, it can be scaled, and yes, we are scaling it at the moment, and we're doing a job with Fingal County Council at the moment in Doneema, where we are paying for the land. But there is a site services fund on that site, and one cancels out the other. So the real question is, I suppose, not whether we can do it if we're paying for the land, but can we do it without some kind of a subsidy? And the reality is no, that we can't. You know, that you do need some kind of a subsidy. But as you rightly said, that goes straight back to the state. I mean, the cost of our houses, say at 250,000, the VAT element of that, and as Pat knows, the tax element, the tax take from PAYE, PRSI for all of the workers working in that is more than the value of the land and the waiving of development levies. So it actually is cost neutral over time. Over time, it actually makes the state money. And one of the huge benefits of affordable housing is this additional disposable income that people have to spend in their own communities. And that really, this is where I'd love the ESRI to do a bit of research on that. We've done our own research on it, and we see for every 1,000 affordable houses that are built, it will actually increase the local income by about 6.5 million per year. That is huge, especially in an area like Ballymun.
Well, I'm glad you mentioned that, because it's another thing I want to come to. The multiplier effect, as you say, you know, the one euro that goes in through, say, social welfare delivers a 7 times multiplier, you know, so, you know, that's important particularly in low income communities. But just, you know, looking more generally at what we can do in terms of people who can afford home ownership. I'm thinking particularly of the kind of statistics Threshold have been gathering around how much rent people are paying versus how much they'd be paying in a mortgage for the same property. And it's not just that we're gathering those statistics within Threshold, it's been gathered generally, I think, over a lot of platforms. And I think there's only 3 local electoral districts in the whole of the country. I think one of them is the current local electoral district where the by-election is happening, where you don't actually pay more in rent than you would be paying in a mortgage. So in a lot of instances, it's like twice the amount that you would be paying in a mortgage that you'd be paying in rent. So could I just ask you, I mean, I want Joe to jump in on this, because I know there's an affordable housing scheme run by AHBs or housing associations in Northern Ireland, for example, which is a kind of shared ownership model, shared equity model, which goes way beyond our 20% model. Do any of you have a view on the macroprudential rules? I'm a renter and I'm working in, just let me give you a scenario. I'm working in the entertainments area. When I work, I earn really good money, but I don't have I'm not permanently employed. I'm, you know, in the gig economy. And when I work, I get great money, but I can't trump up and say, I've got a permanent employment and therefore you can give me 3.5 times my income or whatever it happens to be. What do any of you think about those people who are in precarious employment? Sometimes, as I said, affordability, they're paying twice as much as they'd be paying in a mortgage, being completely locked out of the system where they can access home ownership. Do any of you have any views on that? Maybe Jim might fill us in on what's happening in Northern Ireland, for example.
If I could maybe make a couple of quick comments on that. I mean, interesting enough, and certainly according to the advertisements and broad calculations, in a lot of Northern Ireland, you can actually buy a house cheaper than you can rent. Now, there are obviously caveats in and around that in terms of the loan to value ratio and that type of thing. But I think you touched on a very important point in relation to the co-ownership scheme. I mean, one of the key benefits of going down the co-ownership route is that you don't actually need a deposit, because essentially the equity that's held by the Co-ownership Housing Association is the deposit. So it allows those on lower incomes who have difficulty saving a deposit to access home ownership by, albeit a lengthier, in a sense, method. So the schemes are there. I mean, interestingly, the department now, some research I've been involved in, which will hopefully be published fairly soon, is looking at this intermediate rental product too. The caveat there is that it has to be financed through private sources. There's a source in Northern Ireland Financial Transactions Capital, which comes from Westminster, but can only be used in the private sector. So there's a source there, as well as additional land at low cost and so on. So there is a potential there, but one way or another, there does need to be some sort of subsidy, in my view, to make it affordable for those on low income. And where it comes from can vary according to time and place and to policy, but it needs to be there, simply because, as you pointed out quite correctly, a lot of, for example, those in the hospitality industry or in the service industry are on low incomes, relatively insecure unemployment, and under the relatively insecure employment, and under the current housing finance regime, have no chance of really accessing traditional home ownership.
I just noticed, thank you for that, Joe. I just noticed Christina's back with us. Unfortunately, my screen only shows me 4 people. Christine, can you put on your video so that I can see you? Christine? I'm not sure. Okay.
I'm sorry. Yes.
Oh, thank you.
I think I've now been unmuted by host. My video is there.
I think you've heard some of the discussion that we've been having.
Quite a lot, because I hadn't realised I wasn't.
Yeah, I didn't know that you were there. My apologies. Could you maybe jump in with some of your thoughts on any of this?
Well, I think the core of it is, unhappily, from everybody's point of view, is opportunity cost. It isn't the case that, yes, it is the case that if you build the house, it makes provides to the government. And so looking at it as a sort of individual decision, the amount of money which is being given as a subsidy for land may go back to the government because of the building costs and so on and so forth. But that is not taking the totality in place, because it's just saying that there is no opportunity cost of the subsidized money. And I perfectly accept, and I would agree, that affordable housing is desirable for government, and government has to make that decision. But they have to pay a subsidy one way or another.
I think Michelle's point, though, has been that in Ireland over the decades, we have made that decision to fund affordable housing, you know, through various different means.
Sure.
You know, back in the day, it was mortgage interest tax relief, it was first-time house buyers grants, it was, you know, rates reliefs, it was this, it was that, it was the other thing. And at one point, certainly I think Michelle, certainly in her research, said that it was, you know, we'd one of the highest rates in the OECD in terms of subsidy for home ownership. And I guess the issue is there is obviously a tipping point at where you're discriminating against other tenures by subsidizing home ownership to a particular point. But on the other hand, maybe we've tipped it the other direction, where we've got so many people now in unaffordable rental situations where their prospects for retirement and for older age are going to place significant burdens on the state in terms of, you know, aging pension requirements and so on, that maybe we need to rebalance that. And is that something that's going on in other areas, other countries, Christine?
I think that the period when it was felt that it should be subsidies for home ownership as dominant has gone in most other countries, because they're trying to deal directly with the rental situation. But the point which you was being made, that, you know, once you've got your deposit paid, you will probably be paying less as an owner occupier than you will as a renter, is something which is very well worth looking at. And I think it's linked to the fact that people's insecurity of income. So insurance mechanisms might be better than handing out lots of money.
Thanks, that's a very good point. Can I bring Michelle in on that? She's been working on the report for the, it's the UN, Michelle, I think. And one of the things that they look at there are things like, and again, Christine, you might comment on this, they're looking at things like, you know, for low income or precarious income earners. And that came out a lot this morning, that it's precariousness that's the problem. It's not necessarily the amount people are earning, it's actually how precarious their incomes are. That maybe something like an insurance scheme or some form of government sharing of the burden of that insecurity may be the way to go. Michelle, you might fill us in on the work you're doing on that area.
Yeah, thanks, Aideen. I'm finishing a report for UN Habitat on supports for affordable housing of all types, rented and purchased. I mean, I think the issue around home ownership subsidies is that in Ireland historically we'd very high home ownership subsidies, and of course the biggest one was sale of social housing at a knockdown price. You know, I've calculated local authorities built 22% of the housing stock in the Republic of Ireland, and they now own about 8% of the housing stock. So the difference between the 22 and the 8 is housing we sold off at a big discount. And that's one major reason why our home ownership rates were so high. So that's certainly a subsidy, in my opinion, that we wouldn't want to be going back to repeat. And by the way, it's still there. We're still selling 300 to 500 dwellings a year. So in terms of supports for home ownership, in some cases, a subsidy makes sense for the state and is much cheaper than providing the household in question with, for instance, social housing. But the devil is in the detail of the subsidies you provide. So Hugh's subsidies, the subsidy Hugh receives in the form of land, which I think the scale of the subsidy should be included in the cost of providing the land, or the stated, or cost of providing the houses, the stated cost, because land is obviously not free. But the big benefit of giving that subsidy to Cualann is you're providing additional supply. Whereas other types of subsidies just simply drive house price inflation and just aren't as attractive, such as mortgage interest tax relief. And Christine mentioned, you know, for instance, in the United States and Canada, there are insurance schemes to enable lower income households to access mortgages and to take account of the instability of income, because that's one additional challenge we face nowadays, which is becoming much more serious, is the issue of precarious incomes. And so the person you quoted, Aideen, who has the high income at certain stages, say from cultural industry and the low income afterwards at other periods, that obviously makes it very difficult to pay and to subsidise a mortgage. So the issue is, I think we need a suite of supports. Ideally, we need supports that would enable additional supply, such as supports for the construction of affordable housing. But for a proportion of people, particularly people on low to middle incomes and people with single income households, there also has to be alternatives provided that provide long-term affordable rental. And that, I feel, social housing output has increased. It needs to increase further, but there is a lot of activity going on in that area, albeit it's slow to get projects completed. But there is a kind of a missing part for people who are in income deciles, the lowest 3 and 4 income deciles, that are really in a very difficult position. And for people on lower wage employment, I mean, I'm sure Conor mentioned this morning from the ESRI, after housing costs, they can be poor and in much worse position than people in social housing. So the issue is how to address it, and it's an issue of a suite of interventions. But as I mentioned earlier on, the devil is in the detail of what you propose.
Okay, I'm going back a little bit again. To me, I'm the kind of regular renter here, and I'm on a good income, but I'm not able to get myself out. I can't save because I'm paying €2,200 a month to rent my property. In the UK, for example, Christine, there's a lot more intermediate tenures. There's more going on between the absolute private rented and the absolute home ownership, for example. And same, Joe, in Northern Ireland, where it's coming here. Like we have the cost rental model being introduced, and also the shared, the equity affordable purchase model. Can I just, first of all ask, Christine, look, in terms of intermediate tenures, what have they got to offer in this kind of affordability scenario? And I suppose looking at the Irish situation, I'd move to say, Joe, and ask, what have they delivered for you in Northern Ireland? And then maybe going to Pat, Hugh and Michelle and saying, what have they got to offer here? If I'm looking at the cost rental model, for example, and the output for 2021 is what, in and around €300 units. How long will it be before I've got the remotest hope of finding myself in a cost rental unit? How long is it going to take for this to take off? Is it really going to offer me a really viable option to where I am at the moment? Christine, could you just fill us in on, intermediate tenures in sort of the UK and other, jurisdictions?
I think most of them do cause quite a lot of difficulty. The longest running one in Britain has been the shared ownership, which has been there since 1980, and that works on a straightforward, the housing association that builds the house or gets the house, and the person buys 50% or nowadays even as little as 5%, and pays rent on the rest. Then there has to be additional complications about repairs and maintenance and so on. And that has worked fairly well for quite a lot of people. Early on in the inflationary world in which we currently are not, but we may be soon, it was fairly easy for people who, say, put up 30% and their incomes were going up, they could buy more. And so people did staircase into being full owners. And that was what the product was designed for. But now most of these products are actually partial ownership products in which you expect to live in it and not necessarily own it completely for the whole of your life.
Is that not okay? Is that not okay? If I own a little bit of something, it's not better than owning nothing of something.
It's certainly shown to people who are shared ownership. I'm not too sure that this sort of then 10% below and below that type level do feel ownership and do feel more comfortable, and as such it's highly desirable. There are issues, mostly about how long it lasts and the question about management and maintenance and improvement. And at the moment, we've got a crisis around leasehold, and all of these things are by definition leasehold. So don't buy a 13th story flat with
our legal
cladding.
system is very much anti-leasehold, so I don't need to worry about that.
I'm glad about that, because leasehold is a phenomenally difficult issue in our British system at the moment. The partial equity mortgage, which is Help to Buy, was the major form. It wasn't an affordable housing project. It was a get people into owner occupation project, and it's been denigrated. But it was meant to be helping developers to develop more, and the evidence we had and the work we did was that it did increase output by around 15%, which was quite a significant amount in the period when it was running. Well, it's still running, but it's just about to be got out. But most of the people who bought it, one felt could probably have got in there in 2 or 3 years' time. I'm not sure that that is quite as negative the government has now been told that it was a disaster. I think it was only a disaster because we actually estimated the deadweight loss. Well, nobody ever does estimate those sorts of things. And the deadweight loss was large, but it got a lot of housing built. And in middle England, in other words, the Midlands and the North, in the Northeast, it meant that people on a minimum wage, 2 people on a minimum wage could buy comfortably. And it did matter.
Joe, in Northern Ireland, just looking at our nearest neighbour, part of the same island, we should be more integrated in our housing discussion, for example. What's your view then on intermediate tenures, the kind of halfway mark between full ownership, full, say, social housing, or somewhere in the middle?
Yeah, I mean, at the moment in Northern Ireland, there really is only one show in town, and that's the co-ownership scheme, which is very, very popular. It's not, however, suitable for everybody. Co-ownership, understandably, apply fairly strict financial criteria. They vet each application, and you have to have the appropriate credit record and so on. So those, and we've mentioned them in a number of contexts, particularly those in more precarious employment, do not necessarily qualify for home ownership, for co-ownership. There's also an issue, and again, it's very difficult to prove this empirically, but there is a view that co-ownership in many cases helps people who could actually access low-cost home ownership to buy bigger and better, rather than necessarily adding to supply, adding to those in owner occupancy. In Northern Ireland, we haven't yet the equivalence of what you already have with your pilot cost rental, or exists in various forms in GB, particularly in Scotland and parts of England, the intermediate rental. The Minister has now committed to that, and she's hoping to implement that within the next year or so, politics willing. And that really will be designed to sort of produce this intermediate rental product, similar in many ways to your cost rental, but financed differently, and it's targeted particularly to those who can't access home ownership, but also aren't in that level of need that they would qualify for a social housing, for a social home in an area of their choice. So it's to try and having been part of the research team and so on, we're confident that there is a product that is suitable for the Northern Ireland housing market. But it's not a miracle cure by any means. It'll add to supply a bit. It'll address a need stroke demand for a certain customer, for a certain client in a particular niche market. But again, and you mentioned it too, before this actually happens, before this actually brings units on site, you're talking a number of years.
Hugh, would you, so far you've focused on affordable purchase, Would you be interested in focusing on affordable rental, you know, something kind of in the middle section there for the kind of cohort of people who are kind of currently locked out of, well, they're locked out of home ownership, but they're locked into a very expensive rental section, rental market. Do you see any role for a Cualann, for example, in moving into more diverse tenures, or even looking at something like rent to buy? It's never been really discussed in Ireland. You know, there are a lot of people, as I said, paying a lot of money in rent, but can't get over the line into home ownership. It's not something we've really looked at in Ireland in terms of rent to buy. Would you consider that?
We had looked at rent to buy, and really our focus there was in trying to help people to build up their deposit. So we would have rented the house to them. We would build it as normal. We would rent it maybe over a 3-year period. We would charge them a market rent or thereabouts. And the portion of the money that wasn't required for our costs, and our costs were really just finance costs, would go towards, you know, building their deposit. But to be honest with you, our help to buy scheme, which is different than year one, Christine, our help to buy scheme, which actually goes to provide a portion of the deposit, or indeed now during COVID times, the full deposit, means that our rent to buy model wasn't necessary. So, you know, after our help to buy scheme goes, and it will at some stage, we will certainly look at rent to buy, or rent to own, as we call it, again. In terms of affordable rental, absolutely. I mean, and we're more keen to look at affordable rental than actual cost rental, because cost rental isn't always affordable rental. So, you know, the model that I mentioned at the outset, whereby your rent is really a differential rent, and it is set depending on your income, and there may be a requirement then to have some kind of a subsidy when you are retired. There may or may not. It's interesting the way, you know, people's lives evolves. But if people have that option for that security of tenure, long-term rental, I think they would. I think that they would opt for it. So we are looking at a cost rental scheme in Ballymun for around 286 units, and the rent that we were at there, it's going back a few months now, but we were talking about 1,200 per month for a 75 square meter 2-bedroom apartment. And when you look at the affordability rates for that, and we have a table for that on, if you assume that your affordable rent, we say no more than 32% of your net income, because you're not paying for upkeep of the house, etc. You're paying for your rent and your utilities. That 1,200 would be affordable for you if you're on a joint income of around 55,000. So that's not bad, you know. So and then below that we had 1-bedroom apartments for around 900. So we could cater for almost everybody above the threshold for social housing, which isn't. I know this is a totally different topic, which I would get rid of altogether, because I believe that's holding people back. You know, some people are limiting their income so that they do qualify for affordable housing. I would get rid of that, and I would have a differential rent right the way up to maybe 80 or 90 or 100,000.
Okay.
Or I would leave that.
But I think we have to talk about changing the differential rental structure if we were going to do that. But Pat, just going to you, just on that particular point, intermediate tenures, you know, is there something in that space that would attract institutional investors, or is that kind of very much outside their model? I mean, would an institutional investor consider, you know, some form of shared equity scheme or some form of rent to buy scheme, or it's just not, wouldn't coexist with the model? Interestingly, on the chat, we got a few thumbs up for the old rent to buy, just as a matter of interest, for people who are paying a lot of money in rent but don't see themselves being able to get over the line with the current, as I said, you know, it's maybe a topic for another day, the macro potential rules. I think they were set back in the 1970s. Has anybody even looked at them since? You know, 3.5 times income, says who? You know, that was grand when inflation was 20% in the 1970s. Is it relevant even today? I just throw that out there because I know Christine is shaking her head and going.
No.
Aideen, can I just ask a couple of questions?
Of course.
Well, just firstly to Hugh, how many dwellings has Cualann delivered to date that are occupied, you know, since your foundation? Just thing I've always wondered.
Yeah, less than 100. Michelle, we're finishing off 13 at the moment, and that'll bring it up practically to 100. I know it's only a drop in the ocean, but we have a good pipeline which will bring us up to around 400 for affordable purchase, and if these other cost rental go through, another 200. So it's not a bad pipeline, but the point is that it is a model that could be replicated. We don't have to be involved in all of these developments. Obviously, I think that it is something that maybe the approved housing body sector could look at.
Could I just stop you there, Hugh, because I've been given the old red flag here by the people in the corner. Pat, I'm very keen to just see you in for your last response there. Sorry about that.
I'm not aware of institutional investors in this market obviously being involved in those particular intermediate tenures, but I am aware that they are involved in other jurisdictions. I suppose maybe that's more, I'd say, because the fact that that model hasn't really been developed here, or it may well be that there's not a framework to support it. But I think it can work. I mean, I think Christine has adverted to the fact that shared ownership has been a reasonably successful model in the UK. I mean, none of these models are perfect, but there is definitely a role for the intermediate ownership model. I mean, the one thing you have to watch, obviously, is that it doesn't cause inflation. I know there's been a big debate about that in terms of shared equity, and indeed maybe the same about shared ownership. But the thing I would argue about in the Irish context is that we have the ability to deliver a supply response, because some of the areas where it has been shown to be inflationary is where there was complete inelasticity between supply and demand, such as London. But in Wales, for example, where there was an ability to deliver supply response, it actually did increase supply and it wasn't inflationary. So that's the thing you have to watch. But I do believe, because we have a huge amount of planning permissions here in the country to be converted into construction, that it should have the potential to generate additional supply. And if you can drive up supply, and that is, again, the elephant in the room, we do absolutely need to bring on more supply. If you can deliver more supply, then I think then you...
I'm being pinged here. I'm going to just move on to Christine. Pat, if you mind. John Mark is ready to give his closing remarks. So
Can I say,
back to supply. Thank you very much.
Just answering your question, Aideen. Yes, institutional investment can get involved in these types of intermediate products. I hate to say it because it'll drive everybody around the bend. BlackRock has just put a very large amount of money into a private provider of shared ownership in Britain, much to our surprise. But it does say that they can come in usually with tranches, so that they're taking a risk return for a proportion of the overall costs. But yes, we can get institutional investors into that sort of market.
Can I just make the point, we did have a shared ownership scheme in this country from 1990 for almost 15 years. And it was abolished because it proved to be very problematic. And there were very high rent arrears or very high mortgage arrears associated with it. And the problem is, the model is difficult to operate in the context of the Irish social housing sector, because the combination of a mortgage for, say, half the equity plus an income-related rent for the other half, if you're in employment, income-related rents can actually be quite high. The combination of the two was not affordable for a lot of people. So the model is
the specifics of a model which matter.
We're examining.
I'm sorry, I'm going to actually have to stop this. Maybe it's an area for further discussion. Can we look at a shared ownership scheme like Joe has illustrated in Northern Ireland? Is there something there for intermediate tenures where there's a risk sharing, for example, for people who are in precarious employment? don't and won't be able to get over central bank rules, macroprudential rules, and so forth. You know, is there something there for them? Is there, you know, a role for the AHB sector in maybe providing some of that solution? Is there a role for the institutional investors in maybe providing some of that solution? I'm simply saying from the perspective of people who want to move out of renting into something that gives them a sense of ownership or a sense of place where they feel that they've got something, you know, put by for themselves, for their future, or whatever it happens to be. Because I think if one thing that the research that Threshold has done has shown us, and we focused on it this morning, that people don't just want a more secure rental sector, which they do. They absolutely want a more secure rental sector, but they also want the capacity to move out of that rental sector into other solutions. Surprisingly, most of them want to move into home ownership. A lesser number want to move into social housing. Maybe that's got a discussion for another day. Maybe that's because the social housing sector is, you know, confined to, maybe it's too confined in terms of what it's delivering. As I said, it's a discussion for another day. But can I just say, Pat, unless it's very quick, John Mark is literally in the waiting room.
Very quickly, it was just to come back there on what Michelle said, and she was right to actually point out the shared ownership scheme that we had, and it didn't work very well. But I think we just need to put that in context. The scheme was administered by local authorities, and it did build up a pretty heavy, I think, arrears problem. But I think the point there would be local authorities, I think we'd all agree, are not well placed to be managers of credit. And I think that, you know, a scheme that would be managed maybe by a different entity would have a better success rate, and has been shown to have that in other jurisdictions. So I think the context is important there.
Yeah, thank you for that, Pat. Look, that was a very interesting discussion. Thank you all very much. As I said, the whole point of this afternoon's discussion was to move away from what we need to do to reform the private rent sector, and to actually look more at the kind of blue skies area between what private renting is now and the actors that are in it and coming into it, and where we can go. I'm very conscious of the fact that we didn't talk about the role of, say, the existing small landlords, and I know, Pat, you were concerned about that, but part of the reason we didn't was because we wanted to focus on where is supply going to come from and what's happening, you know, in terms of, you know, new events in the sector. And particularly like to thank all of you for the effort that you've put into this afternoon's presentation and discussion. And I'll hand over now to John Mark. And again, thank you all very, very much.
Thanks very much, Aideen. A very interesting and engaged panel discussion there. My task over the next 6 to 7 minutes is to try and kind of provide some kind of common themes or a summary, and also to thank everyone. So maybe just to kind of kick off in terms of, you know, what we heard initially around Christine Whitehead's contribution, that housing economics is no use and no fun if policy isn't involved. There's an interdependency between them both, and there's a core relationship between local income and housing costs, but that relationship is deteriorating and it requires regulation. There was a observation that our private rented sector is in this kind of emerging world during or late stage COVID, if you like. There's a potential for a long period of uncertainty as measures wind down, if they are winding down indeed, and lots of people are indeed more insecure than they were. There was a discussion about there being little evidence that rent controls deter investors and little evidence that regulations choke off supply. And that only first generation rent controls are a deterrent to investment. In terms of the financialization, good or bad, this was seen as not a straightforward issue. And while it does improve management and longer term rentals, it also separates how the house kind of process from local incomes. There's issues about gentrification and the treatment of housing as an asset. And the need to invest in affordable homes, as long as we promise not to sell them off as an alternative to income supports. That was some experience that Christine had from the UK. And a core issue is insecurity in the labour market. And that's certainly borne out today in terms of a number of accounts from the interaction between the restrictions and the private rented sector. Tom mentioned that investors are not so much concerned about rent certainty measures, and that the Irish pension structure is predicated on everyone owning their own home. and housing needs to be seen as part of a wider social system. Connor from the ESRI, Connor O'Toole, talked about the greatest changes in rents during COVID-19 occurring in the cities, with Dublin accounting for over half of the registered tenancies, and on the demand side, a preference to move out of the urban areas, and that there was an increase in properties in Dublin let out in the city due to COVID-19, but the pandemic was felt disproportionately on the low-income renters in terms of employment shock, lower income rentals and households with lower incomes paying higher percentages of their income on rent. And I think what was interesting was that, you know, before the pandemic, 30% of private renters didn't have enough income after rent, but with the PUP and the other interventions, that increased, and with the restrictions that increased to 41%. But then with reduced spending, that dropped actually to below that 30% amount to just about 1 in 5. So that while we expect a strong recovery in the labour market, renters generally work in sectors that are worst hit and the slowest to recover, and that the long-term solution is increased supply. Obviously a common theme today, especially cost rental and in home ownership. And we need to expect affordability to remain a challenge post-COVID-19. A lot of that was echoed in Martina Macaulay's input in terms of the impact of COVID-19 on the private renter market in the north of Ireland, and to recognise the unequal path into the pandemic and the unequal impact on sectors and tenures, with the young and the low paid renters worst hit. A doubling of income support for renters from March to May, and many of those people accessing income supports for the first time. That was double that of the social renters. And 4 in 10 private renters supported by Housing Rights NI fearing eviction. And then we looked at kind of students who lost their jobs and couldn't afford rent, but with their own parents themselves struggling and having lost income themselves. So she talked, I think it was very useful, that phrase, pre-existing conditions, that those experiencing problems renting prior to COVID-19 found their issues were further exacerbated. And similarly, foreign nationals had little to no family support, with no help from childcare, often renting from unregistered landlords, so they couldn't access the appropriate housing supports. And that narrative of home, certainly in both jurisdictions, in the UK and in Ireland, about staying home, working from home, that home narrative being central to a response to the COVID-19 pandemic, but the ability to maintain and make use of that home being impacted by affordability and pre-existing conditions, and exposing those fault lines in housing, that we might be experiencing the same perfect storm, but we're in very, very different boats. The tenant sentiment survey that we launched today as Threshold, that's been well rehearsed in terms of over half of the respondents saying that they rent because they are unable to buy their own home. Over 60% wishing to own their own home within 5 years, but only 30% expecting that they'll be able to. Just less than half feeling secure in the rented home, and almost 90% finding it difficult or extremely difficult to find or secure a home. We heard then from Michael Byrne of UCD, who echoed a lot of the findings from the experience of Martina Macaulay. So I'm not going to go over all of those because I'm right up against the clock here. But basically, renters who had experienced challenges prior to COVID-19, often they were exacerbated. Now, some of that was protected through income supports, and there was a general reduction in consumption, and that's echoed by what Tom Dunn had said about the impact of income supports, plus a reduction in consumption, and therefore some balancing out. But certainly what's very, very clear is the disproportionate impact among renters who experienced income loss and job loss, and were already negotiating a very precarious, a very insecure tenure. And then that question then this afternoon posed by Aideen in the chaired panel discussion, should we expect a structurally lower rate of home ownership and focus on strengthening the private rented sector? So without rehearsing all of those inputs and responses, I think it's important to say there was a kind of a full an interactive response across the board. We talked about shared ownership. We talked about what can be done in terms of affordable housing through the likes of the Cualann model, the forces and factors at play in terms of delivery, as pointed out by Pat Farrell, the rents and the house prices having risen in Northern Ireland despite COVID-19 by Joe Frey. So a number of perspectives there, and Christine coming back into the discussions there. So I think at this point, it just behoves me to thank everyone and to thank both the ESRI, our colleagues in the ESRI, and our staff in Threshold, and the teams involved in organising and setting up the communications behind the scenes. Everyone who gave of their time today, who prepared papers, who presented, who were panelists or speakers. I want to thank you all and for making the day such a success, and for the number of people who have attended. Thank you, our attendees, for staying through the day and kind of listening and learning and asking and hopefully being kind of nourished by the kind of discussions that we're having. So certainly food for thought for the coming Housing for All policy strategy that government will be launching. This is all happening obviously in a very news-rich and events-rich time. You know, today we heard about the announcement from the minister about the rent pressure zones and the future of rent certainty. And a day like this does help us to spark thinking and maybe a different perspective or a different set of perspectives in terms of our planning or for our policies and our services. So just without further ado, thank you for your attention. Thank you for your contributions, and we'll see you soon.